Hello, friends. Right now, in 2026, there are bills that seniors on Medicare and Social Security are legally not required to pay. Not discounts, not applications that might work out someday. Programs that exist right now for prescription drugs, energy costs, Medicare premiums, and property taxes. And here's the part that should bother you. Most of the people who qualify are still paying every single one of them, every month, without knowing they don't have to. Not because the programs don't exist, because nobody told them, and none of these programs activate on their own. We're going through all 5 today. What each one covers, who actually qualifies, and exactly what one step gets you in. But stay through the end, because the last one is the only program in this list that doesn't require low income to qualify. It just requires that something changed when you retired. And that one is the one most people have never heard of. Quick context before we go further. This video is for US adults currently on Medicare, specifically anyone receiving Social Security who wants to understand which cost reduction programs they may actually be eligible for. Everything shared here comes from publicly available official information, the Centers for Medicare and Medicaid Services, the Social Security Administration, and reporting from AARP. I will name each source as we go. This is educational content only. It is not personalized financial, tax, or legal advice. And nothing here is a guarantee that you will save any specific amount. Eligibility depends on your individual income, your state, and your circumstances. Before any major decision, talk to a benefits counselor who knows your situation. Stay through the end because the last program is the one that applies regardless of current income. And it is the one most people have never heard of. 5 programs. 4 have income thresholds. 1 does not. Here is where we start. Program 5, property taxes. If you own your home and you are 65 or older, almost every state has a program that reduces, freezes, or partially eliminates your annual property tax bill. According to AARP, the vast majority of seniors who are eligible for property tax relief never apply for it, not because they do not qualify, but because the county assessor does not file the paperwork on their behalf. Your senior discount does not activate when you turn 65. The bill keeps arriving at full price every year until you submit the application yourself. Income limits for these programs vary significantly by state, and some states set them high enough to include middle-income homeowners. To find your specific program, search your county name and senior property tax exemption, 2026. Or call your county assessor's office directly. Before you apply, confirm one important distinction that most videos skip entirely. Some states offer a property tax deferral rather than an exemption. Deferral means the unpaid taxes accumulate as a lien on your property, and your heirs may be required to settle that balance. If anyone in your household would be affected by that, confirm whether the program is an exemption or a deferral before you sign anything. Program 3, prescription drug costs. Extra Help, also called the Low Income Subsidy, is a federal program from the Social Security Administration that significantly reduces what you pay for prescription drugs under Medicare Part D. It caps your out-of-pocket medication costs at amounts set annually by the Social Security Administration, with no standard premium and no standard deductible applying to you. The income limit in 2026 is approximately $23,000 per year for a single person, roughly $1,900 per month. If you are in that range and have not applied, you are overpaying for medications you need every month. But here's the part most people miss. If you already qualify for any Medicare Savings Program, which is the next program you are automatically enrolled in Extra Help, no separate application, no additional step. That automatic stacking is one of the most overlooked efficiencies in the entire Medicare system. Apply for Extra Help directly through the Social Security Administration. Program 1. The Medicare Part B premium itself. This is the deduction most recipients notice. First, the amount the Social Security Administration pulls from your check every month before you see it. The Centers for Medicare and Medicaid Services administer a set of programs called Medicare Savings Programs, specifically QMB, Schlambe, and QI funded federally and run through state Medicaid offices. The most comprehensive is QMB, Qualified Medicare Beneficiary. QMB does not just cover your Part B premium, it covers your deductibles, co-payments, and co-insurance. Everything Medicare normally asks you to pay out of pocket. The other programs, SLMB and QI, cover at minimum the Part B premium itself. Income thresholds are updated annually by the Centers for Medicare and Medicaid Services and vary by state. Your state Medicaid office determines your exact eligibility. The critical point is this: these programs are not automatic. Nobody enrolls you. The deduction continues indefinitely until you submit one application to your state Medicaid office. And if you qualify for any of these programs, extra help for your prescription drug costs activates automatically alongside it. Before we cover the last two programs, consider a situation that shows why what is coming matters most for people who do not qualify for anything covered so far. This is an illustrative composite based on a pattern that appears repeatedly in Medicare counseling cases. A 70-year-old retired school principal in Virginia, we will call him Harold, sold the home he had owned for 30 years, the same year he retired. That sale, combined with his final months of salary, pushed his income significantly above the IRMAA threshold for that single year. 2 years later, Medicare looked at that tax return as Medicare always does, using income from 2 years back, and began deducting a surcharge from Harold's Social Security check every month on top of his standard premium. Harold called Medicare. They confirmed the surcharge was correct based on his 2023 income. What nobody told Harold, he could file a form from the Social Security Administration listing his retirement as a life-changing event and request that Medicare use his current, much lower income for the calculation instead. Harold paid the surcharge for 11 months. Then his daughter found the form online and filed it on his behalf. The surcharge was eliminated. That form existed on day 1. Harold simply did not know its name. Program 4. Heating and cooling costs. The Low-Income Home Energy Assistance Program, LIHEAP, is a federal program administered by the Department of Health and Human Services through your state. It pays your utility provider directly for energy costs. Not a discount, an actual payment on your behalf. Before anything else, one correction that matters. LIHEAP is not a monthly ongoing benefit. It is one-time or seasonal assistance, and the amount and frequency varies significantly by state. The timing is what is accurate and urgent right now. The summer cooling assistance window is open in many states, and this program is first come, first served. When the funding runs out, it closes until next year. Seniors 60 and older receive priority status in most states, meaning you can often apply before the general public window opens. Pause and write this down to find your state's LIHEAP office. Dial 211. That is the National Social Services line. Free and available in every state. There is also a connected federal program called the Weatherization Assistance Program that will send someone to your home to insulate it, seal drafts, and repair heating or cooling equipment at no cost, permanently lowering your energy bills going forward. You can apply for both through the same office at the same time. Now we reach Program 2. And this is the answer to the question that opened this video. IRMAA stands for Income-Related Monthly Adjustment Amount. It is a surcharge. Medicare adds to your standard Part B premium if your income as reported on your tax return from 2 years ago exceeded a certain threshold. For 2026, that threshold for single filers is based on your 2024 income. If your 2024 income exceeded approximately $106,000 as a single filer, Medicare is currently deducting an IRMAA surcharge from your Social Security check on top of your standard monthly premium. For married couples filing jointly, the threshold is higher. Confirm the current figures with the Social Security Administration before taking action. Here is what makes this particularly consequential for retirees. Medicare uses your tax return from 2 years ago. That means if you retired in 2024, sold a home, took a large distribution from a retirement account, or had any other one-time income event that year, you may be paying a surcharge right now based on money you no longer receive and will never receive again. The Social Security Administration administers a formal appeal process designed specifically for this situation. The form is called Form SSA 44. It is the IRMAA Life-Changing Event Appeal Form, free and available from the Social Security Administration. Pause and write this down. 6 qualifying life-changing events recognized by the Social Security Administration: retirement or reduction in work hours, loss of income-producing property, loss of pension income, an employer's settlement payment ceasing, divorce, and death of a spouse. If any of these happen to you in 2023 or 2024, and your income is now significantly lower than it was then, you may be eligible to have your IRMAA surcharge reduced or eliminated entirely. Here is how it works. You file Form SSA 44 with the Social Security Administration. You include documentation of the qualifying event, a retirement letter, a relevant tax document, a death certificate, depending on the situation. You show your current or projected income is below the IRMAA threshold. The Social Security Administration reviews the form and recalculates your surcharge based on your current income rather than the 2-year-old return. File within 60 days of receiving your IRMAA notice for the fastest resolution. If that window has passed, filing now still positions you for the next annual recalculation. This is the program with no income requirement. It does not ask how much you earn today. It asks whether your income dropped after a specific event. For a large share of retirees, people who sold a home the year they retired, people who had a high-income final working year, people who lost a spouse, the answer is yes. Here are the 5 programs together. Program 5. Property tax exemptions for homeowners 65 and older. Income limits vary by state. Application required. Confirm exemption versus deferral before filing. Program 4, LIHEAP. One-time or seasonal energy assistance income-based. First come, first served. Dial 211 for your state office. Program 3, extra help for prescription drug costs, income-based. Auto-activates alongside any Medicare Savings Program approval. Program 1, Medicare Savings Programs covering the Part B premium and more income-based. Apply through your state Medicaid office. Program 2, Form SSA 44. The IRMAA appeal, not income restricted, requires a qualifying life-changing event. Filed with the Social Security Administration. 3 things before you close this video. First, log into your My Social Security account through the Social Security Administration and look at your current Medicare premium line. If there is an IRMAA surcharge listed, that is your starting point for a Form SSA 44 review. Second, before filing, talk to a SHIP counselor, a state health insurance assistance program counselor. The consultation is free in every state. They can confirm whether your specific life-changing event qualifies and what documentation to attach before you submit. Third, if someone in your life is on Medicare and had a significant income event in the last 2 years, a retirement, a home sale, the loss of a spouse, share this video with them before their next premium notice arrives. The form exists. Most people simply do not know to look for it. If you want to go deeper on Medicare Advantage options that can reduce your Part B premium through a different route, including the Medicare Give Back benefit, that is the next video.